Good morning, children. This is the continuation of what we discussed in the last class, lesson 1. So, in the last class, we have discussed about the socialistic economy, meaning of socialistic economy. The father of socialism is called Karl Marx, and the system through which all the economic sources and economic activities are owned by the central government or the central authority. We call it as socialism or socialistic economy. Then we discuss about the features. What are the different features of socialism? That is called public ownership means of production, central planning, maximum social benefit, then non-existence of competition, absence of price mechanism, then equality of income, equality of opportunity, class society. This is what the features of socialism. Then we discuss about the merits, reduction in inequalities, rational allocation of resources, absence of class conflict, end of trade cycle, promote social welfare. Then we come to the mixed economy, how it is a combination of both communism and the free economy, or we can say planned economy and the free market economy. Then what it is a combined benefits of both socialism and the capitalism. Also we discuss about the various features of mixedism or mixed economy, and we discuss about the merits like a rapid economic growth, balanced economic growth, economic equality, special advantages. Then we discuss about the demerits of this mixedism or mixed economy also, and finally we conclude that mixed economy is nothing but it contains both the inequalities of capitalism and inefficiency of socialism. And at last we discuss about the comparison between the different economic systems. So we have discussed about the based on 8 features how capitalism, socialism, mixedism are different in each other, or in what point they are together. So this is what we discussed in the last classes. Today we continue with the other terms of lesson 1, macroeconomics. So this is called concepts of macroeconomics. So the important concept used in the macroeconomics are nothing but there are 2 things, that is called stock variable and the flow variable. So when we speak about this, the term it clearly gives both are variable, whether it is a stock or whether it is a flow, both are variable, but in operation both are different. Okay, what do you mean by stock variable or what do you mean by flow variable? So both may increase or decrease at a point of time or over a period of time. So we'll discuss what do you mean by stock variable and what do you mean by flow variable. So the term is clearly given variable because it changes from time to time, but stock has its different meaning and flow has its different meaning. We'll see one by one. So what do you mean by stock or stock variable? So it refers to a quantity of a commodity measured at a point of time. So any quantity that is being measured at a particular point of time, as on today. So we call it as stock. The examples are given in macroeconomics. These the following are considered as the stock variables. What are they? Money supply, the level of unemployment, foreign exchange reserve, we call it forex reserve, then capital are the examples of stock variable because they also changes, but they changes at a point of time. So you can able to measure what is the rate of unemployment or what is the money supply as on today, as on a particular day or as on a particular time, and what is the forex or foreign exchange reserve of your country, what is the capital. All these things are called stock variable because they can able to measure at a point of time, at a particular time, what it signifies. So this is called stock variable. Then another term, important term used in the macroeconomics, it's called flow variables. So it is measured over a period of time. So stock measured at a point of time, whereas flow variables are measured over a period of time. The following are the some of the examples. National income, say for example, over a period of time from the last year to this year, or from 2005 to 2010, or 2018 to 2019. So this is called variables. This is called the quantity or the particular phenomena that can be measured over a period of time, not on a as on date, not on a particular time, but over a period of time. So national income, import, what is the amount of import compared with the last year or few years back. Similarly, export. What is the consumption level? What was the consumption level last year and what was the consumption this year? Similarly, production, investment. These are called examples of flow variable. So you should understand clearly anything which can be measured at a point of time, we call it as stock. Anything which can be measured over a period of time, we call it as flow variable. Then another one is called economic model. So model means nothing but a representation of some situation. We call it as model in general. So it is a simplified form of representing real situation. We call it as model. So what do you mean by economic model? So economics use some models to describe the economic activities. Usually the economic statistics and mathematics are interrelated because usually some of the economic variable or economic problems can be explained or simplified or represented with the help of mathematics, graphs and equation. So anything which can be simplified or represented the real situation in pictorial form or in the form of graph or in the form of equation or in the form of mathematical formula, we call it as model. So anything which can be explained based on some application, the main purpose is to simplifying the representation of the real situation or the real scenario. So economics also mainly uses its model, economic model mainly used or mainly explained with the help of mathematics, graphs and equations. And the commonly used economic models. What are the commonly used economic models? That is called supply and demand model. How supply and demand that are interrelated in connection with the price. So we call it a supply and economic model to explain the economic problems related to how to fix the price with the help of the supply and demand. And another important popular method is called circular flow model. We will discuss later. We will discuss now. We are going to discuss now. Another one is called Smith model. Okay, it is nothing but Adam Smith. So he also explained the phenomena with the help of some equation or the graph. So it is called Smith model. So among these three, now this lesson we are going to discuss about the circular flow of income or circular flow model. So what do you mean by circular flow of income or circular flow of model? It is a model of an economy showing connections between different sectors of an economy. We already discussed each sector in an economy that contributes towards the national income. So maybe the sectors may be classified into individuals or the household one side, firms, then government, then the next one may be the rest of the world or external economics. So these are called the sectors. So household or individual, firms, government and external sectors. So we are going to discuss about this, how the circular flow of income that establishes relation among the different sectors or how they are depends upon each other or how they are interrelated. So this is called circular flow of income. So what does circular flow of income explain? It shows the flow of income, goods and services and factors of production between economic agents such as firms, household, government and nation. So it establishes relationship between how the income flow takes place between firm, household, government and the nation, and also how the goods and services that flow from the firm to the household or the other sectors of an economy, and similarly how the factors of productions that also flow from the individual or household to the firm to the nation or the government. So this explain the relationship between flow of income, or it explains the concept how it is related with the various sectors of an economy like flow of income, goods and services and factors of productions, how it passes or how it is being interrelated with the firm, household, government and nation. Okay, so the circular flow analysis is the basis of national accounts and macroeconomics. So now we will discuss about what are the different types of circular flow of income. We can able to explain the different types of circular flow of income. So definitely how we can able to explain the different forms of circular flow of income. So we have three types of circular flow of income: two sector model, three sector model, then the four sector model. How in among the four sector, the various things like how the flow of income takes place, how the production of goods and services takes place, how the factors of productions are being used or transformed among the different sectors. So first we will see about the two sector economy or two sector circular flow of income. So in a two sector, assuming that the economy consists of only two people who are the household is constituting, comprising or constituting or representing one side, another one is called which one? Firm. So how both are interrelated, or how both are helpful to each other, or how the economic activities are being transferred among these two sectors. So when you speak about the household play the dual aspect. They are considered as a factors of production also, and they are acting as a consumer also. So they are considered as a sole supplier of factors of productions. So one side, and another side they are also called which one? Consumers. So household sector plays an important two roles. So the household sector is the sole buyer of the goods and services. That is called one role. Households are acting as a consumers. Another one is they are the sole supplier of the factors of production. That is called supplier of land, labor, capital, and organization. So this is the role of the household. And when they act as a factors of production, what they do? They receive some income, isn't it? So this income is called factor income. So what are the factor income? I will explain with the help of the flow chart or the diagram so that you can understand easily. So by rendering factor services to the firm, assuming that only two people are the household and the firm. So now the household rendering their factor services in the form of land, labor, capital, and organization to the firm. So by making use of these services, what the firm will do? The firm can able to produce goods and services. By making use of these factors of production, what the firm should do? The firm should reward the factors of productions in the form of factor income. So now the factors of productions, they receive factor income. Now they turns to be the consumer. So what they do with the help of the factor income, they spend its entire income on the purchase of goods and services produced by the business firm or the business sector, actually being produced by the factors of productions. So what they receive in the form of factor income, again they are spending for the consumption of goods and services. That is why the household acting are playing dual role. One side they are the sole supplier of the factors of production, another side they are considered as the consumer. So the household sector receives income from the firm sector by providing the factors of production owned by it or rendering their factor services. So this is about the household sector. Now come to the firm. What the firm do? The firm collecting revenue. How it collect revenue? After the goods being produced by making use of the factor services, the goods are being again sold by the firms to the same factors of production or the household or the consumer, because the household are acting as a consumer role also. So in that way they can able to generate revenue. How they generate? The firm generate revenue by selling the same goods and services which are being actually produced by the factors of production, but with the help of the factors income. Now the income passes to whom? Again to the firm. That is why the firm gets the revenue by selling the goods and services to the household sector or the consumer, because household sectors are playing consumer role also. So how the firm generate revenue? It hire the factors of production in the form of land, labor, capital, and organization, which are owned by which one? The household. So that the firm sector sell the entire output to the household, nothing but selling the goods and services to the household. So this is the role of the firm that you can understand about the how the flow chart. With the help of the flow chart, of course it is given in your book also, but I will show the another picture of how the two sector flow of income that takes place in an economy. So I will show the another schedule also that you can able to understand. There are two sectors in an economy. One is called household, another one is called firm. So the household supply their factor services in the form of land, labor, capital and organization to the firm. This is called outer circle. By making use of the factor services, the outer circle, the firm produces goods and services, and again it should pass to the household. For rendering the factor services, the firm should reward the household in the form of factor income. That is called rent, wages, interest and profit. So now the income is with the household. They will spend their entire income for the consumption purpose, like buying the goods and services. So the income should go back again to the firm. So this is the explanation of the two sector circular flow of income. So from the diagram we can understand how the functions that takes place between the household and the firms. So in the diagram there are two flow, or we can say there are two circles. One is called outer circle, another one is called inner circle. So the outer circle represents how things go from household to firm, and similarly how it comes from firm to the household. You see the outer circle. In the case of outer circle, what is happening here? The household render their factor services to the firm. So we call it as, it is called the real flow. In return, the firm, by making use of the factor services, it can able to produce goods and services. It passes again back to the household or the consumers. So this is one way. So this is called the outer circle or the real flow. And another inner circle also takes place between these two, household and the firm. So it is called monetary flow, or it is called money flow, because the household will receive from the firm factor income for their factor services to the firm. Okay, that's why it comes from firm to the household. With the help of the factory income, the household spend their entire income for consumption expenditure or buying the goods and services. So again it back to the firm. So this is called monetary flow. So the outer flow is called real flow, the inner flow is called money flow or monetary flow. So the basic identity is what we can understand from this two sector circular flow of income, that is called Y. Y represents income or national income or individual income is equal to consumption plus investment. So what do you mean by consumption plus investment? As I told, income what they receive by the factors of productions or household in the form of factory income, that should be always equal to what consumption, what they spend on the goods and services, buying of goods and services. Okay, and again it turns to be the investment for the firm, how they can able to produce, they can able to generate income again that has been put it used for the production of goods and services. That is why it is called investment. So that the spending by one person should turns to be the investment for the another person. In that way, the income in the two sector economy should always equal to the consumption plus investment. So out of the total income, what they spend for their consumption expenditure, that should be equal to the investment by the firm. That is why in the identity should be Y is equal to C is equal to I. We can say like this: income should be equal to consumption expenditure by the household, and the to what extent the household spent on consumption, that should be equal to the level of investment by the firm. So this is what explained in the case of the two circular flow of income. And the three circular flow of income also the same thing. You see the diagram, you see the picture from, you can understand that two things we have already discussed. What are they? First one is how it flow from the firm to the household, the income for in the form of what? Wages, rent, dividend, profit, rent. In the form, it should go from the firm to the household. In return, with the help of the factory income, what they do, the household will spend their income for the entire income for the purchase of goods and services. Okay. Now, here what is the role of the government, or how, in what way household and firm is related to the government, or how the household, government and the firm is interrelated. So what the government do? The government will also collect taxes from the two people. What are they? The government collected taxes from the firm also. It collect taxes from the individual or the household also. Now with the help of the taxable income or the help of the income or the revenue, what they do, the government should make payment to the household some social transfer, like we can say the pensions transfer payment. We call social transfer, called transfer, without doing rendering services, but the government should spend some money to the household or the individual. That is called social transfers. Though there is nothing is being no service is rendered by the household, in spite of that the government spends something to the individual. So this is called social transfer from the government to the household. And similarly, with the help of the taxes collected from the firm, what the government should do, the government, with the help of the tax amount, the government makes some purchase of goods and services from the firm. So in that way it creates, or it related some sort of relationship between this government, household and the firm. So this is what explained in the case of the three sector economy, circular flow of income. So you can understand that from that explain part. In addition to the household and firm, inclusion of the government sector makes this model three sector model. What the government do? The government levies taxes on the household and firm. So the government collected taxes in the form of individual income tax from the household, from the firm, in the form of direct taxes or indirect taxes like GST, IST, whatever it may be, that collected by the government from the firm. So it levies taxes on the household and firms, and with the help of the amount, the government what should do? The government also purchases goods and the purchase of goods and services from the firm. The government make purchases from the firm and also receive factors of production from the household sector. The government make use of the individual or the factors of production. After that, what do? On the other hand, the government also makes social transfer like pension, relief and subsidies to the household. Pension being received by the household without rendering any service. Of course, they have rendered already, but money being transferred, not rendering any services at present. So these are called social transfer. Relief fund, like from the Prime Minister's relief fund in case of diseases and case of flood and famine. So that also passes to the individual without rendering any services by the individuals. Subsidies to encourage the particular activities, especially in the agriculture, the government provides subsidies to the household. So this is what, with the help of the tax revenue collected by the government, part of the amount that is being transferred again back to the household in the form of transfer payment. And similarly, government pays to the firm for the purchase of goods and services. Government will also buy some goods and services in order to do service to the society. So they can also spend money. Again, the money should go back to the firm. So this is what the three sector flow, how the money takes place in an economy. So under three sector economy, the identity should be YAC, income is equal to consumption expenditure plus investment expenditure, along with what is the amount being spent by the government, that is called government expenditure. The two things already discussed in the two sector economy. So in any cases, the total income of the nation should be equal to the consumption expenditure plus investment expenditure plus government. If you add together, it should be equal to income. So we can say Y is equal to C is equal to I is equal to G also, because by adding these 2 or 3 together, that should be equal to income. So this is how the three sector flow of income being explained. And the next one is called circular flow of income in a 4 sector economy. So here the diagram is same. Apart from that, what is more important? The firm export something to the rest of the world, and similarly the rest of the world should also export to the firm, or you can say in another way, because export will be for one person it is import and another person it is an export. So see what the household will do, the household will import to the rest of the world, nothing but we export to the other government. In turn, the rest of the world should export, means we are importing from the rest of the countries. So this is what the 4 sector economy. Yes, so all the 3 sectors. So here how the relationship is related, how household, government, firm and rest of the world. So with the help of factors of production, whatever the goods being produced in excess, that is being exported to the rest of the world, or it is being imported by the rest of the world. Then similarly, the rest of the world or the countries, though what they find extra in excess, they will also export to the firm, or we can say the firm import from the rest of the world. So this is what explained in the case of the four sector model. So in a four sector economy, in addition to household, firm and government, a fourth sector, namely external sector, is included. Nothing but but in the real life, there is no two sector model, there is no three sector model. All the money flow actually being carried out or being circulated among these four only. What are they? Firm, household, individual, with the rest of the world. So in real life, only four sector economy exists. So this model consisting of what are the household, government, firm and external sector, nothing but the export and import. Usually without export and import, no country can survive today at present. So that is why all the economy now at present, they are being operated under the four sector economy only. So household, firm, government and external sector. So the external sector comprises export and import, nothing but importing from the rest of the world, and we are whatever excess with us, we are exporting to the rest of the world. So in a four sector economy, expenditure for the entire economy includes what are they? C plus I plus G, means consumption expenditure, investment expenditure, G. So these are all taken internally or within the country. That's why it is called domestic expenditure. Means consumption by the country, investment by the country, government expenditure by the country. These happens within the territory of the country. That is why we call it as domestic expenditure. Plus what we have to add the difference between X minus M, that is called net export, means the difference between export and import. So why it is called net export? The difference between export and import, it may be positive or negative. Sometimes the export is greater than the import, it is positive, and the export is less than the import, it is called negative. So if you add all these things together, then this should be equal to the circular flow of income of a four sector economy. So income should be equal to adding of consumption expenditure, investment expenditure, government expenditure plus X minus M, the difference between export and import. So now we come to the part of the lesson 1. So just we summarize what we discussed. So we discuss about the meaning, and we studied about what are the objectives, what is the study of studying the main purpose of studying macroeconomics and its performance, particularly how the growth of an economy takes place. So we study in macro aspect, we are going to study in detail, but it consists of the broader concept like employment, inflation, poverty, inequality, income, savings, investment, all comes under this one. Then also we discuss about the economic models, that is how it is being carried out between this like a circular flow of model. It helps to understand how the various sectors of an economy are interrelated or how it functions under the macroeconomy. And also we studied about the basic economic system, the three basic economic system. What are they? Capitalism, socialism and mixed economy, and their merits, demerits and futures. This is what we discuss. And just we'll discuss about the multiple choice question answer. Of course you can also learn by yourself, but just we see the answer. What is the first one? The branches of the subject matter of economics is nothing but which one? Micro and macro. Okay, so of course the two major branches of economics is nothing but micro and macro. Then who coined the word? I told you it is the term micro and macro, here only given macro, but both micro and macro is coined by Ragnar Fish. So the option C is the correct answer. And next one is called, who is regarded as the father of modern macroeconomics? So this is nothing but J.M. Keynes. He is called the father of modern macroeconomics. He wrote his book, the General Employment and Theory, where he in the year 1936. So he is called the father of modern macroeconomics. And what is identify the other name? of macroeconomics, that's called income theory, because macroeconomy deals with the entire economy as a whole. It studies about the aggregates, so it is the income theory. And fifth one, macroeconomics is study of aggregates. It is not connected with individual, it is not connected with the firm, it is not connected with nation, it is a study as a whole, the entire economy. And next one is called indicate the contribution of J.M. Keynes to economics. He wrote the book that's called General Theory of Income and Employment. So this contribution is nothing but general theory. The steady increase in general price level is termed as which one? Inflation. Okay, inflation studies about the changes or increases in the general price level of an economy. Eighth one, identify the necessity of economic policies. So to solve the basic problem and to overcome the obstacles to achieve growth. All these three things are together for any countries of economic policies. It highlighted all the three things to solve the problems, overcome the obstacles to achieve the economic growth. So all of the above. Indicate the fundamental economic activities of an economy. So production and distribution, production and exchange, production and consumption. We discuss in the economics and its types. We discuss about the main goal is to achieve the economic growth. The economic growth is achieved or supported by the two things we go discuss. What are they? And production and consumption. And the production and consumption is supported by the some other things and also the external factors. That is what we discuss. So production and consumption is the fundamental economic activities of any country or any economy. And economy consists of consumption sector, production sector, government sector. So economy should always consisting of all the three things. So this is all of the above. Identify the economic system where only private ownership of production exists or only private means of production exists, nothing but capitalistic economy, because all the resources are owned by the private sector or the manufacturers or the individuals. Economic system representing equality in distribution, because all the resources are owned by the central authority. So socialism is the concept that try to bring equality in the distribution of income and wealth to all. Who is referred as the father of capitalism? Adam Smith. The country following capitalism is called United States of America. Then identify the father of socialism, Karl Marx. The next one is an economic system where the economic activities of a nation are done both by the private and public together is termed as what? That is called mixed economy. As we discussed, mixed economy is economic system where it taking into account the benefits of both capitalism and the socialism. So done by both the private and public together. Quantity of a commodity accumulated at a point of time, as I told, isn't it? At a point of time means stock. Over a period of time means flow. So quantity of commodity accumulated at a point of time, we call it as which one? Stock. We discuss about the various examples of what are the examples of stock and what are the examples of which one? Income, as we discussed. Okay, stock on your time. Then say for example stock, what we say? The reserve, foreign exchange reserve. And similarly for the flow variable, we can say the income is the best example of which one? Flow variable over a period of time. Then identify the sectors of a two-sector model. So as I told, in a two-sector model, only two people are there. One represents household, another is called firm. So household and firms. The circular firm model that represents an open economy is called which one? Four-sector model. You cannot take all the above because two-sector model consists of two. What are they? Firms and household. Three-sector consists of three. What are they? Firm, household and the government. Four-sector consists of what are they? Firm, household, government and the rest of the world. So the option is C, not all of the above. Okay. So this is what we discuss in the first lesson. We stop here. We will continue with the second lesson, the next class.